This video will guide you through how VisionWorks, our next-generation life planning software, can take your financial planning business to the highest level.
Thank you for your time. Today we'll look at the insurance needs, and as always, we'll be taking a life planning approach. I'm going to suggest that most clients resist paying insurance premiums, especially when the needs analysis is done based on what I'm going to call a black box calculation. It's not really clear to clients why the need is being calculated the way it is. So as with all life planning practices, clients should understand their need for insurance and the amount they require. The most effective approach to learning and decision-making is always to conduct any analysis with the client, including an insurance analysis. And when conducting the insurance analysis, the key question to ask clients is, how will your life change? The one thing we know for sure in the event of death or disability or critical illness is that people's lives definitely are going to change. And the whole point is that it's only the client who can suggest what the changes might be. And that's the key reason we have to do the insurance analysis with them. With VisionWorks, the needs analyses are done in separate what-if scenarios or sub-solutions, and we'll learn more about this in a minute. They enable you to make changes, how will life change, so that you can analyze the insurance needs without changing the actual plan. When clients suggest changes and see for themselves the consequence of inadequate insurance coverage, belief in their insurance needs increases significantly. I want to remind you that belief is an important ingredient in the action equation. We want clients to act on the needs analysis, then they need to believe them. So last week in the Uncovering Estate Issues webinar, we saw that leaving the cottage to build junior created an estate issue, which could be resolved by adding a permanent insurance policy. This week, we're going to look at insurance more from what I'll call a lifestyle needs perspective. So let's go to VisionWorks, and we will have a look at the insurance tab on the Solutions page, Insurance tab. And I want you to notice that there are 4 sub-tabs: life, disability, critical illness, and long-term care. So you can analyze the 4 needs for each of the main parties in the plan, in this case, of course, Bill and Sue. So the key concept to grasp is that of the insurance sub-solution. So when I select, for example, the life tab, I want you to notice that the solution we're in, insurance needs, now becomes insurance needs, life needs, bill. In other words, that's the sub-solution that we've now moved into. The solution is insurance needs. The sub-solution is life needs, bill. And this is what allows us to go in and make changes and see the impact on the plan. So we're on Bill's tab, and what we'll do is we'll do a needs analysis for him. Now, I just want to remind you that if you click Help and the needs calculation explained, it will explain the life needs calculation. But basically, it's very straightforward. Bill dies today, his career income ends, all the terms of his will are executed. So if the cottage is going to Bill Jr., it will go as of today's value and so on. And in addition, of course, for other assets like TFSAs and RSPs, where the beneficiary is designated within them, let's assume that those funds are being transferred to Sue's TFSAs and RSPs. So everything that would happen in real life happens. So let's click the Calculate button, and we'll see the additional need calculation. And you can see that it's $322,000. The thing that I want you to appreciate again is that this is just the mathematical starting point. This says if we had insurance in place of $322,000 forgetting this spike down, which is in the life expectancy year, that's the estate need. But from a lifestyle need up to the last year, the $322,000 invested and so on would eliminate this negative main bank account where we've run out of money, in Sue's case, roughly around age 80. So in doing the analysis, I also want you to notice that you need to select the invest in portfolio. So when the benefit comes in, where is that insurance benefit going to go? And again, there are a number of reasons we need to do this. The most important being what kind of return is being earned on that portfolio. And we'll talk about returns and insurance benefits a little bit later. I also want you to notice that you can analyze a lifestyle need for any life expectancy. This is Bill's current life expectancy. So coming back to this whole concept of a sub-solution and how will life change, what we're going to do is go to the entries tab where we have the different entries, and a message comes up. And what it basically says is, do you want to continue to the entries tab within the life needs sub-solution, or do you want to switch out of the life needs sub-solution back up to the main insurance needs solution? So we are, of course, going to continue so that we can make some changes. So the question really to Sue is, if Bill were to die today, Sue, how would life change? So we'll go to Sue's tab, and Sue says, well, if Bill died today, I wouldn't want to work anymore. So we'll just go to the salary entry for her, and we'll remove any further salary after this year. So notice there's a little insurance shield. We cannot change the current year value. So I realized that if Bill were to die today, we'd still be assuming, income for the rest of the year. But short of the database being a monthly database, we have to work on the basis of year-end values. So all entries for the current year remain. It's all entries in subsequent years that change. So what we want to do now is go back to Bill's tab, the insurance. Remember, the additional need was $322,000, and what we're going to do is recalculate it. So Sue is no longer working, no longer earning income. And what we see is that the need now has increased from $322,000 to $468,000. The other thing that I think is very important to consider is, and this is the reason for where's that money going to be invested, is what kind of portfolio allocation do we want? In other words, right now, Sue's a balanced investor, but if she's going to receive the insurance benefit, is going to have to live off of it, her attitude might be that she wants a very different allocation, something very conservative. So we'll just go to the allocation tab. Again, we'll continue in the insurance sub-solution portfolio, and that's the one I'm going to reallocate to something that's much more conservative. So we'll select the conservative portfolio here, make the change. We can see on the graph there's a bit of a difference, and then we'll go back to Bill's tab, the insurance sub-tab, and we'll recalculate his insurance need, which remember was $468,000 and is now going to increase to $552,000. So just as we did sub-solutions for life needs and made changes, we can do the same for disability, critical illness, and long-term care needs. Now, I want to just speak for a moment about the long-term care need. So I'm going to select it. You'll notice that the default at age entry is just 2 years before somebody's life expectancy. And I'm going to suggest to you that when you do long-term care needs, that you make this several years before. simply because if anybody ended up in a long-term care facility, let's say because of dementia, for an extended period of time, then we'd be talking about two residence costs, if you will. So I'm going to suggest that that's something that's very important to do. The other thing that I want to speak about for a moment is dealing with clients who are younger. And I think this is an excellent example of why working with the client will help them really understand the needs. So let's assume for a moment that we're dealing with a young couple. They're both working, they have young children and so on. And when we start talking about what would happen if Bill died today, Sue would have the children to take care of, her house to manage, her career to manage. Everything would be in a great deal of overwhelm for her. So again, this is where we have the ability to go in and make some changes. For example, we could go in and add a nanny for the home. We could go and add a housekeeper, gardener, whatever might be necessary so that Sue would be able to better manage what would be a very unhappy life. And again, remember, we're only putting in these additional expenses for a limited period of time, the nanny just for a certain number of years until the children are, of a sufficient age and so on. I want to thank you for your time.
Book a demo. We'd be happy to show you more of VisionWorks' incredible features.